I looked up what everybody's saying about these tariffs. And what I think is interesting is that you can have a ton of different opinions and they all sound really smart. They all make really good points. Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to the show. I'm your host, Todd Dexheimer. And today I want to talk about the craziness that's going on in the markets, not necessarily the economy, although there is some questions in the economy. You know, are we going to enter a recession? Are we not? Where are we exactly? But overall, it feels like the economy is actually fairly stable, right? Unemployment's up a little bit, but it's still pretty low. 4.2%. It's not bad. Consumer spending is still pretty good. So, you know, everything actually looks pretty good. But the markets, when we're talking about the stock markets, Bitcoin, just treasuries, man, they are just going up and down. Look, it's a yo-yo. The Dow Jones today, as I'm recording this, is down 900 points. That's after it just completely crashed over the last couple days, and then all of a sudden spiked, went back up. It looked like, wow, all of a sudden we are in the best economy we've ever been in, because the stock market went up more than we've ever seen in history. It's just like, oh, all of a sudden everything is perfect and roses are out and blooming, and everybody's happy now. And then the next day we wake up and for some reason everybody is now we are panicking again. It is pretty wild, which is, quite frankly, part of the reason I'm not in love with the stock market, is because it is this emotional roller coaster. I feel like, I shouldn't say there's no common sense in the stock market. Certainly there is, but when you see these huge ups and downs, it's like, there's no common sense. What are you guys doing? You're not even thinking. It's all emotion based investing, which again, I get it's not. The good investors aren't emotionally based investing. But the public who's in there is emotionally based investing. So it does mess things up. But what is going on with Trump tariffs? And that's part of the confusion here, is what's happening. Trump's been threatening tariffs. Before he even got elected president, he said he's going to implement tariffs. Once he got elected president, he says he's going to implement tariffs. This is nothing new. I think what's causing the yo-yo of the stock market is the way it's been gone about, right? So we're going to put a pause to it. Nope, we're going to enact it. We're going to put a pause to it. Nope, we're going to enact it. It's going to go 10%. No, it's going to go higher. It's going to go lower. We're going to negotiate with countries. We're not going to negotiate with countries. So there's been a little bit of that confusion, I think, that has caused anxiety in the market. But in my opinion, the theme has been tariffs, and we're going to do tariffs. And it seems to be that the real reason for the tariffs is to negotiate to create fair trade, or what Trump would consider fair trade. Now, everybody's got a different opinion on what that exactly means and what he's trying to achieve and what that's going to do to the market. But that's what he's been saying. That's what Trump and the administration has been saying, is that they want tariffs to create a more fair trade and create leverage, create a negotiating tool. Tariffs have now been put on a pause, other than on China, I believe. So China is like 125% increase. Everywhere else has been put on pause, last I heard. And then, U.S. Treasuries, U.S. Treasuries went from what was it, like 4.2 on the 10-year down to like almost 3. It was like 3.86 or something like that, I think was the lowest. But then the very next day, trading day, treasuries just skyrocketed. And now they're sitting right around 4.2. Again, they're back, but they went down and right back up. And a lot of people said when the stock market goes down, when we have turmoil like this, what's going to happen is treasuries are going to go up. But what we're seeing is that foreign countries, China included, are selling U.S. treasuries, which is causing the market to go up. So we are seeing treasuries go up while we see the stock market generally go down, and uncertainty in the market. So, all right, I looked up what everybody's saying about these tariffs. And what I think is interesting is that you can have a ton of different opinions and they all sound really smart. They all make really good points. And so I was listening to a podcast the other day, and this was the CEO of a large company. And what he was saying is, look, I think we're actually not going to see any inflation. I don't expect inflation to happen. We might see a little rise in prices, but overall, we're not going to see inflation. By the way, usually when we see inflation and the expectation would be that oil prices go up. Oil prices are down significantly. In fact, they're trading in the 50s right now. And so that's down significantly. So oil prices are down. Housing prices are flatlining. I don't want to say down, but flatlining. And so those are a couple of the big tickers that we look at when we look at inflation. And those are down. So this guy said, well, look, we're not going to see inflation. The tariffs are actually going to work. It's going to cause other countries to come to the table and essentially eliminate their tariffs, and then we will eliminate our tariffs on them, and it's going to create more fair trade. At the same time, I see Jamie Dimon out there, who's the CEO of JP Morgan, and he is saying we're going to enter a recession. Like, it's just imminent. Like, we're going to enter a recession. The experts, the economists, say there's a 60% chance of entering a recession at this point in time. So basically, the economists are saying we have no clue. We're just going to throw a number out there, 60%. I mean, it's pretty close to 50%, right? It's like, we maybe will, maybe won't. Yeah, we just let you know, kind of think maybe. That's in my opinion, is an answer of we just have no clue. But we've got so many varying opinions. So again, I did some research and it's just trying to see who out there and what everybody's opinion is, because I think it's really important to try to understand. And as I've tried to understand how the tariffs would affect the economy, and then how that affects what I do, multifamily real estate, and understanding where we want to be positioned. And then personally, my personal life, like how my wife and I want to spend or not spend our money to pay attention. We want to pay attention to the markets. Not that, I don't think, like, we don't have a ton of lavish expenses that we could just cut, but can we be a little tighter with our money if we are feeling strong about entering a recession? So Gary Cohn, who is a former director of the National Economic Council under Trump, he thinks that tariffs are bad. He's against tariffs. He thinks they act like a tax on American consumers and increase prices for goods, which a lot of people think that. I've got my own take on that. I actually think that, yes, they definitely will increase prices, but there's only so much that the American consumer is going to allow for. And also competitors are going to want to step in and undercut those prices. So competition is still there. Supply and demand is still there. So you can't just raise prices. to an extent you can, but you can't just continue to raise prices. If demand goes down, then you can't raise prices, right? So it's still supply and demand issue. What I think will happen is prices will go up some, but not as much as what some people think. Some people think it's just a pure tax on the American consumer. What I think what happens is that the companies that are manufacturing those goods, they will pay the price. So their margins will go down slightly. The distributors, their margins will go down slightly. The wholesalers' margins will go down slightly. The end seller, their, Target or Walmart or Amazon or whoever, their margin will go down slightly. And even as much as the material suppliers, their prices will go down slightly, or profits, margins. And so a lot of people are eating the cost on this. It's not just the American consumer. It's a lot of companies are eating that cost. So I think, in my opinion, that's the truth. And it's not, prices won't just go up. They will, but it's not one for one, right? It's not, hey, we're going to raise, if the tariff happens and we implement a 15% tariff on a country, our goods go up by 15%. That's just not the truth. He believes tariffs disrupt global supply chains and hurt the U.S. manufacturers reliant on imported components, which again, I certainly I can understand that. I think it disrupts the supply chains, but it also provides opportunities for other countries, provides opportunities for the U.S. companies to maybe step in and take over some of those gaps that you might see. And then he warns that it can lead to retaliation from trade partners harming U.S. exporters. And yeah, but in the U.S., we actually export a terribly small amount of goods, like one of the worst in the world. When we look at it, like Germany is one of the highest exporting countries. I think they're right around 40%. Most countries are around like that 20 to 30%, and the US is well under 20% as far as goods exported. So we are not exporting a lot of goods. So as far as what it's going to hurt U.S. exporters, first of all, we just don't have a lot. And yeah, I guess he's true. He's right. It could lead to retaliation from trade partners. But I think what Trump is trying to do, what I see that Trump is trying to do, is he actually wants that retaliation. He wants to use that as a negotiating tool in order to create a better deal. So we are seeing that play out with China. They continue to raise, and Trump just continues to one up them. So every time China raises, Trump goes, all right, we're going higher. And so we'll see how that one plays out. But as far as I know, at least as of this recording, I don't think there's really a lot of other countries that are playing China's game. Most of them are trying to come to the table and have a common sense. Jason Furman, chair of the Council of Economic Advisors under Obama, he is very against it as well. Same type of things. He thinks that long-term tariffs will dampen investments, business investments due to the uncertainty. That seems weird because if long-term tariffs are actually in place, there's uncertainty up front, but once it's long-term, there is no uncertainty. There is certainty. So that seems like a very odd statement, but that's what he thinks. Creates higher costs for producers, creates lower production. So the next one is Doug Holtz Eakin, former CBO director, conservative economist. He says tariffs are a blunt tool that distort markets rather than address specific trade abuses. He believes they risk triggering trade wars, which can shrink the global trade and U.S. GDP. and he's concerned that they undermined U.S. leadership in pushing for free trade globally. So he actually thinks that it's going to create less free global trade. So we'll see. So those are three that are very against tariffs. And there, by the way, there's many more. There's many more, and most of them have a lot of the same opinions, thinking that it's going to harm exporters and global cooperation. Disrupting long-term investment, supply chain planning, raise input costs for U.S. manufacturers. A lot of people think that, look, I mean, one of the things that Trump continues to preach upon is that he wants to bring jobs back to America. But a lot of people think, well, that's just not going to happen. It takes so long for these manufacturing companies to actually ramp back up. Plus, if they build new factories and they start bringing manufacturing back to America, by the time they get all this going, which takes a couple of years, like that may end up biting them in the butt, because what happens when the next administration drops all the tariffs and now they're left holding the bag. They have this new manufacturing facility, but they're not able to manufacture because now it's cheaper to manufacture overseas. So I think you might see a little bit of uptick in manufacturing, but I do tend to agree that I don't know how many companies. I don't know if I was owning a manufacturing company, I'd be really hesitant to bring a bunch of manufacturing back in the U.S. and just count on it being long term. Count on it continuing after Trump, because you don't know who's going to get elected next and what their thoughts on tariffs are, and whether they want to remove them or not, and quite frankly, the effectiveness of the tariffs, even in Trump's presidency. What if these tariffs are proven to be a big strain in the economy? We'll go through a recession, things are bad, and Trump goes, you know what, I'm going to change course and we're going to drop these tariffs and change. So I think you're asking for a lot to bring manufacturing jobs back. I definitely believe in that. All right. So there's plenty of people in favor as well. So Peter Navarro, former White House Director of Trade and Manufacturing Policy, thinks tariffs are very necessary to protect American manufacturing and rebuild industrial capacity. So he thinks it's actually a good thing for American manufacturing to protect it. He's not saying necessarily, well, he does say rebuild the industrial capacity, but it's eroded to where it is right now. He's saying we don't want it to erode even further. He argues they reduce reliance on hostile or unstable foreign suppliers like China. Believes tariffs create a language for better trade deals and national security outcomes. So thinks they really do help. And again, that negotiating power that Trump talks about, he thinks that's definitely true. Let's see. I've got Stephen Moore. Tariffs are a temporary tool to reset unfair trade relationships. He likes that they can negotiate. They provide negotiating leverage, and they're aimed at restoring U.S. industrial base and securing national economic interests. So that's Stephen Moore, economic commentator, and Orrin Cass, conservative policy advisor, American Compass. He believes free trade orthodoxy ignores the social and regional costs of offshoring jobs. Tariffs can support domestic industries and communities, even if prices rise slightly, and argues that strong domestic economy and labor force justifies short-term economic inefficiencies. So there's a lot of people that are for it. There's a lot of people that are against it. We'll see what happens. And I think a big portion again is this negotiating piece. Does it provide real negotiating? Does it help bring in manufacturing back into the U.S.? Does it help rebalance the trade deficits that are hurting the U.S.? Because there certainly is massive trade deficits when we look at where the trade is at and how much we export versus import, how much other companies are exporting. We are well behind the curve. And so it certainly you know, is there real free trade out there right now? Like, I don't know. I guess this isn't my area of expertise, but it doesn't seem to be the case. So it'll be interesting to see what happens and how this all plays out. Right now, as I'm talking, there's a 90-day moratorium or pause, freeze on most of the tariffs out there. So it's going to be interesting to see how these next 90 days play out, and then after that 90 days, what kind of takes place, what goes into effect. Are these countries going to come to the negotiating table and try to work with the Trump administration and create this fair trade that he wants, or are we going to tailspin into a recession? I think, as far as where I'm concerned, I feel like there's a stronger possibility of entering a recession, definitely. And so, what I want to do is just be cautious, and we already are cautious. So I think it's just smart to be overly cautious right now. If you have big expenses coming up that you can avoid, optional expenses, I think that's maybe wise to do. At the same time, I don't want you to hide in fear, but for us, look, for real estate, I mean, we still want to buy. We're still looking at buying, and I think now is a great time to buy, even though U.S. Treasuries have gone back up. I think if you can buy something at a good basis and still get good pricing, you're going to get good cash flow. And I really don't think that we're going to get into a position, and I could be wrong, but I don't think we're going to get into a position where we're seeing a massive deepening recession like the Great Recession, the GFC that we saw in 2008. So most recessions that happen are pretty light and fairly temporary, fairly quick. And so I still think, multifamily commercial real estate in general is a really good place to be. As long as you're getting good terms, good rates on your loan or buying cash. Look, I think the worst place to be right now, and I've been pounding this for a while, but I now more than ever, I think the worst place to be is to be purchasing a commercial real estate asset with short-term floating rate debt. Anything locked in for less than 3 years, I think you're putting yourself at a really big risk. If you're taking investors, you're putting them at a very big risk. I think the companies that are doing that are irresponsible. And, as an investor, if you're a passive investor, I would personally shy far away from those companies. I think that, we just have too much uncertainty happening. There's a lot of companies that think short term is good, and I get their philosophy. I really do. I understand their philosophy, but I think they're just a broken philosophy. And they could be right. And if they're right, you're going to look like geniuses. If they're wrong, they're going to look like idiots. And I think there's just too much risk to be wrong, because what their philosophy is that U.S. Treasury rates are high, 4% or above, and they're going to go down. And so I'm going to sell or refinance in the next 3 years. But what happens if the interest rates go up, which I think there's a very, very good possibility that interest rates go up? Well, cap rates are going to expand likely, and you're going to have no chance to refinance. Values are going to go down or stay stagnant, and so you're just going to be left holding the bag. So that's why I'm definitely for longer term fixed rate debt, 5 years or more, by the way. If you can get 10 years, 7 years, 10 years, I think those are definitely good things. All right. So buckle up. It's going to be an interesting ride over the next, I think, 6+ months. We'll see what happens. Stock market is going nuts. It's an emotional roller coaster, but that's just how it is. And so, yeah, we'll stay tuned. We'll pay attention. We'll see what happens in the markets, and keep giving updates. But that's all I got for today. You have a fantastic rest of the day. Make every day Saturday. Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.